Here's a fact that will blow your mind. Gen Z is saving for retirement at rates 23% higher than millennials did at their age, despite facing housing costs that are 67% more expensive. But here's the plot twist. This aggressive saving might actually be setting them up for a financial disaster that nobody's talking about. If you're wondering whether your generation is winning or losing the money game, the next 10 minutes will reveal shocking truths about how millennials and Gen Z handle money completely differently. I'm going to show you which strategies are actually working, which ones are backfiring, and the one financial trend that's about to change everything for both generations. What's happening, everyone? Today we're diving into the most important financial conversation of our time, how millennials and Gen Z approach money in completely different ways, and why understanding these differences could be the key to your financial success. The millennial generation entered adulthood during the worst economic crisis since the Great Depression. Meanwhile, Gen Z came of age during a global pandemic that turned the entire economy upside down. These aren't just interesting generational differences we're talking about. The financial strategies these two groups are using right now will determine everything from future housing markets to how retirement will work for the next 50 years. Whether you're a millennial feeling behind or a Gen Z trying to figure out where to start, understanding both approaches isn't just helpful. It could literally make or break your financial future. Let's break down what's really happening with money across these generations, and I guarantee you'll discover something that surprises you. Let's get real about the financial nightmare both generations are living through, because the numbers are absolutely brutal. Student debt is crushing both groups, but in different ways. The average millennial is still paying off $33,654 in student loans, many of them now in their 30s and 40s. Gen Z is graduating with even more debt, $37,000 on average, and that number keeps climbing every year. We're talking about starting adult life with a mortgage payment, except you don't get a house. The housing crisis hits even harder. When millennials were 25, they needed about 3.6 years of median income to buy a median-priced home. Today's 25-year-old Gen Z needs 5.6 years of income for that same house. In major cities, we're talking 8 to 10 years of income. San Francisco rent prices have increased 340% since 2000, while wages have only grown 78%. Then there's the retirement catastrophe nobody wants to discuss. Millennials are the first generation where most people won't have traditional pensions. They're betting everything on 401(k)s that many couldn't start funding until their 30s because of economic instability. Gen Z faces an even scarier reality. Social Security will only pay out 75% of promised benefits by the time they retire, and everyone knows it. But here's what makes this particularly brutal. Both generations are also dealing with inflation rates not seen in 40 years, wages that haven't kept up with basic living costs, and an economy where traditional career paths don't guarantee financial security anymore. Now here's where it gets fascinating. How each generation responds to these challenges reveals completely different financial personalities. How millennials handle money. Millennials learn to be paranoid about money, and honestly, it's saved them. They're the generation that made side hustle a household term. Federal Reserve data shows 44% of millennials have secondary income sources compared to just 28% of previous generations at the same age. Their investment strategy is methodical and research-heavy. The average millennial puts 67% of their portfolio in stocks, but they heavily favor index funds and ETFs over picking individual stocks. They're the ones who made robo-advisors like Betterman and Wealthfront mainstream because they wanted professional-level investing without paying traditional advisor fees. Millennials also revolutionize spending priorities. They choose experiences over stuff, which actually makes perfect financial sense. A $3,000 vacation becomes a memory, but it doesn't require maintenance, insurance, or storage costs like buying physical things. How Gen Z handles money. Gen Z takes a completely different approach that's both brilliant and terrifying. They're more aggressive investors, despite having less money to work with. Recent data shows 61% of Gen Z investors are comfortable with high-risk investments, compared to only 42% of millennials at the same age. But here's where Gen Z gets really interesting. They're driving massive growth in alternative investments that didn't even exist for millennials. They're putting money into cryptocurrency, fractional real estate through platforms like Fundrise, and even collectibles investing through apps like Rally and Masterworks. Their spending reflects growing up digital first. Gen Z spends 25% more on digital services and subscriptions, but 31% less on traditional retail compared to millennials. They're optimizing for access and flexibility over ownership of physical items. Let me show you concrete data that reveals how different these generations really are. According to the latest consumer expenditure survey, the average millennial household spends $63,036 annually, 32% on housing, 16% on transportation, 12% on food. Gen Z households spend their money completely differently, 28% on housing because they're more likely to have roommates or live with family longer, 18% on transportation due to higher rideshare usage, and 14% on food, with way more spending on delivery and convenience. The most shocking difference? Savings rates. Despite earning less money, Gen Z saves 13.8% of their income on average, while millennials save 11.2%. However, millennials have higher total savings because they've been working longer and earn more. The investment approaches reveal fundamental personality differences between generations. Millennials diversify across traditional categories: stocks, bonds, real estate, some alternatives. They read financial publications, follow established principles, and make methodical decisions. Gen Z treats investing more like gaming. They're comfortable with apps, quick decisions, and learning through experimentation. This led to both spectacular wins and notable losses. The GameStop phenomenon of 2021 was largely Gen Z-driven, showing their power to challenge traditional institutions, but also their willingness to take massive risks. Here's the mind-blowing trend that's changing everything. Gen Z is becoming more financially conservative as they get older, while millennials are getting more aggressive with their investments. This completely contradicts what every financial expert predicted just 5 years ago. Everyone expected Gen Z to stay high risk forever, and for millennials to become even more conservative as they hit their 40s. But 2024 data tells a totally different story. As Gen Z experiences their first real market crashes and economic volatility as actual investors, they're shifting toward traditional strategies. Meanwhile, millennials are watching inflation destroy their conservative savings and moving into riskier investments to try catching up on retirement goals. This convergence reveals something huge. Both generations are adapting based on market reality instead of sticking to age-based stereotypes. The future of personal finance won't be defined by when you were born, but by flexible strategies that respond to changing economic conditions. What's even crazier is how this is forcing financial companies to completely redesign their products. Apps and platforms built specifically for millennial investing or Gen Z trading are scrambling to create more adaptable approaches because their target audiences are changing faster than expected. Let's wrap up what we've discovered about the financial landscape for millennials and Gen Z. Both generations face historically unprecedented challenges: exploding education costs, impossible housing markets, and retirement systems that might not exist. But their responses show totally different approaches, shaped by when they experienced economic trauma. Millennials use methodical caution, preferring diversified, research-backed strategies. They've embraced multiple income streams, experience-focused spending, and automated investment tools. Their financial behavior reflects lessons learned from watching economic disasters unfold. Gen Z shows technological fluency and calculated risk-taking using app-based platforms and alternative investments. They prioritize flexibility over ownership, shown in subscription-heavy spending and willingness to live with family longer to optimize costs. The biggest revelation is the convergence happening right now. Both generations are learning from each other and adapting to current market realities instead of following generational expectations. This means successful financial planning in 2025 isn't about doing what your generation typically does. It's about staying flexible and learning from everyone. For anyone in either generation, the key insight is this: your birth year doesn't determine your financial strategy. The most successful people are combining the best approaches from both generations while adapting to their personal situation and current market conditions. All right, now I need to hear from you because this affects everyone watching. Whether you're a millennial who's been grinding for years or Gen Z just starting your financial journey, your perspective creates the bigger picture. Drop a comment and tell me, what's your biggest financial challenge right now? Are you following typical patterns for your generation, or are you doing something completely different? Have you borrowed successful strategies from the other generation? Here's what I'm really curious about. If you could give one piece of financial advice to someone from the other generation, what would it be? These cross-generational insights often reveal the most valuable strategies. Your comments help shape what I cover next and create discussions that benefit everyone. I read every comment and frequently feature the best insights in future videos. If this breakdown helped you understand where your generation stands financially, smash that like button and subscribe for more real talk financial content. I drop new videos every Wednesday, Thursday, and Friday covering investment strategies, economic trends, and financial tools that actually work in today's economy. Soon, I'm revealing the specific apps, platforms, and strategies that both generations are using successfully right now. You won't want to miss it because I'll share exact tools and techniques that work regardless of your age or experience level. Remember, your financial future isn't determined by your birth year. It's determined by the decisions you make today. Thanks for watching, and I'll see you in the next one.